you keep hearing this. We're long overdue for a huge, disgusting bear market, so get ready for the mother of all crashes, right? Well, you've heard the warnings, but looking at the big picture and some recent messages coming from the Fed, I just don't see the prospect of a major bear market starting anytime soon, and this is not the time to be fearful. So today, I'm going to show you exactly why the outlook for the foreseeable weeks, months, and even years ahead probably remains very bullish, and why you need to get over your market crash PTSD from last week and last cycle and last month. I get it. Look, let's start with the statement. A bear market is overdue. What the hell does that even mean? Overdue. Look, at some point there's going to be a horrific bear market. It's going to be terrifying. And it's probably going to be driven by AI unemployment. But that's a later us problem. It's not here yet. At the risk of stating the obvious, overdue suggests something hasn't happened for a very long time, so it must be coming very, very soon. But just look at equities here. How is a bear market overdue when we've essentially survived 3 effing bear market corrections in the past 5 years? Take a look at this chart and it's pretty clear. There are 3 recent dips in the S&P 500 with drawdowns of 19%, 24%, and 34%, the longest of those lasting almost a year. Well, the most recent was this year. So with that in mind, how exactly is a bear market overdue? The idea just doesn't really match up with recent history. And if we switch our attention over to the Russell 2000, there are some very interesting developments happening over here because it looks like the hedge funds were wrong. As pointed out here by Milk Road, hedge funds have been shorting the Russell 2000. But they're now starting to close those positions, and a short squeeze may be on the cards with the index hitting new all-time highs this week. This is very significant because the Russell 2000 is basically 2,000 smaller market cap companies in the US stock market. It gets rotated into when risk is back on. Liquidity is easing, and there's increasing confidence in US growth, which is exactly what's happening right now. This rotation is also a sign of wider market health, as it shows the rally broadening beyond just the S&P 500 and broadening beyond just the Magnificent Seven, broadening beyond the NASDAQ 100, resulting in a more sustainable uptrend for the broader market. I know what you're thinking. That sounds great, Lark, for Russell people, but what about my crypto bags, man? Look, if you take a look at the Russell 2000 alongside the total 2 charts, that's all of crypto except Bitcoin, there's a correlation as the 2 markets both pump when there's an increase in risk on sentiment. So basically, what's good for small cap companies is also likely to be good for the cryptocurrency markets beyond Bitcoin. Also, remember that rotation towards the Russell 2000 can especially happen when the Fed turns dovish, which is exactly what the Fed is doing right now. In fact, the Fed just turned to dovish. But before we break down that part of the story, look, guys, you want 3,000 bucks? Listen up. If you've been around crypto for a while, you probably already know the name Femex. They're one of the oldest exchanges in the market. Long-standing, trusted, deep liquidity. But their new offer right now is absolutely next level. And it's for new users to sign up using the link right down here. Plus, if you've already signed up using my link before, you can still make the deposit and get the insane cashback offers. So you deposit 10,000 bucks, 3,000 back. 5,000 bucks, 1,500 back. 3,000 bucks, 350 bucks back. These are insane. This is very rare to see a deal this aggressive. Look, I've been trading on Femex for years. It's secure, it's liquid, and it's open to everyone everywhere. That's you. You might need a VPN in some cases. This promo only lasts a few more days, super limited time, so don't sit on it. Link down below. Go check it out. The Fed. Look, based on this week's comments from Jerome Powell, who implied that there's a pivot coming with the ending of quantitative tightening, it's positive for prices that Powell's tone is shifting like this. Rate cuts are happening, QT is ending. Okay, it hasn't ended yet, but they're probably going to end it in the next meeting or 2. By the way, this week also saw Paul Tudor Jones states that he expects Fed funds rate to be at 2.5 to 2.75% a year from now, which would be, in his words, a really compelling story for higher equity prices. He also said, when talking about whether or not we're in an AI bubble, he said, if it's a bubble, it's a small one. Okay? One of the best traders in all time. You're going to fade him? I'm not going to fade Paul Tudor Jones. And as for incoming rate cut expectations, over on Polymarket, users are currently putting a 95% chance of a 25% basis point cut in 2 weeks at the end of this month. Also, on the topic of market bubbles and just how bubblish the current environment is, yeah, look, I get it. The markets might feel a little bit crazy, people making shit tons of money in options and all that silly stuff, but don't get caught up thinking there isn't any way for assets to keep expanding. In fact, Raoul Pal recently pointed out that when it comes to tech stocks, we're still less than one standard deviation away from the trend. And on this chart, he compares what's happening now to what it looked like late in the 90s during the dot-com bubble. Can you see the huge, glaring, gigantic difference? By the end of our cycle, it might look like that, but it doesn't look like that now. With the chart back then moving multiple standard deviations away from the trend. Just one deviation away from the trend. It's crazy, guys. Raoul also makes the point that liquidity is delayed and incoming, and this then leads to the ISM, which tracks the business cycle, all of which points to expansion ahead and prices moving up. Or in other words, not a bear market. Markets top with the business cycle. The business cycle is ages away from topping, as the ISM shows us. Then another point to consider is the relative length of this bull market. As Phil Rosen points out, the current equities bull run has seen the S&P 500 deliver 83% returns over 3 years, okay? But that doesn't imply that it's all over, as the last 11 bull runs have delivered, on average, 191% returns. Look, these are crazy numbers, okay? And I know it's easy to look at the markets and go, everything should be faded all the time. It's PTSD, man. It's PTSD, I get it. It's been painful, especially for crypto investors. And in terms of length of the average bull market, we're using equities here because crypto is more and more wedded to the fate of what happens to equities versus running its own little bubble again. In terms of the length, this is the 6th bull run since 1974 to hit the 3-year mark. All of those previous runs, when they hit 3 years, went on considerably longer. The shortest was 5 years long from 1982 to 1987. The longest was 13 years from 1987 to 2000, delivering 507% returns. So in that context, even if markets feel like they've been on a wild run, with traders piling into speculative stocks and options and Bitcoin hitting all-time highs, gold and silver going to galactic highs, you can see that in terms of both percentage gains and bull run length, and even the charts, the technicals, it would not be at all unusual for the rally to extend not just further from here, but a lot further from here. We're talking years more. So if that's the case, if equities are looking so damn good and all the magical macro tailwinds are lining up for equities, why are crypto traders so damn bearish and depressed all the time? Look, after last weekend's crash, I get it. I get it. It was fucking disgusting. It makes sense people are still nervous. PTSD is running high. Plus their expectations the 4-year cycle tops out around nowish. Bear market starting tomorrow, right? Mixed in with bad memories from the last bear market, it's weighing heavy on crypto investors' minds, especially when most altcoin investors have made no money this cycle. When it comes down to it, the 4-year cycle is all about Bitcoin, and Bitcoin's in a completely different position than ever before. It's a huge mainstream asset now being shielded by BlackRock and the US president and all kinds of other people. But there's Bitcoin, and then there's really everything else. So if the broader bull market has further to run and we're going to fully risk on, then BTC will go up, and then likely the rest of the crypto market moves up after that. Don't give up hope yet. I know it's been rough. I've been there getting kicked in the balls with you guys, okay? I've got a huge crypto portfolio. Better times are ahead. Thanks for watching.